Okay, so we were basically talking about divergences and confirmations. A divergence pattern is one where you will find that the market, in the case of a bearish divergence, let's just admit, just ignore the whole signal aspect to it. Let's just show you from just few examples. So don't look at this bear thing. Now you have to interpret it yourself. It's not going to plot, this indicator is not going to plot bear for every signal we take. But if you observe that the market had formed a high, and you observe that the divergence value was say it was like say at a high value, say like 65, 70, or anything above 50, and you find that the market is again gone higher clearly, but the divergence value is significantly lower, then it is likely that the market will reverse from here. And again, you can see this time the market again kind of extended itself upwards, but the divergence value between this point, this was about 72 or 73, and this was about 65. So it's huge, it's a large difference for the same price, which indicates that the market is now bearish. It's not going to hold this point on whatever time frame you apply it to, and it's likely that the trades will be good. So you observe here, this is the highest value of divergence in this chart at this point, and you observe that there's another peak and another peak, and even though the market's kind of pushing itself upwards, this divergence values are continuously plotting lower and lower and lower. So any signal that keeps firing on these key levels would be likely from which where the market would want to reverse and change direction. Of course, you kind of have to have like uh, just a general idea of the harmonics of the market. You will observe that, how, for example, it was moving like this, then you would also want to wait for a move like that. You cannot see, you cannot expect that the market is just going to randomly reverse in a like, one second, sorry. Yes, so you should always try and focus your attention towards really understanding what is happening. You should see these things. These are cues. You see someone's rejecting it from here. This is what makes a this is what gives you a cue to now start looking for short signals to take. When you are seeing someone, there's a huge shadow out here, huge shadow out here, shadow, shadow, shadow. When you observe these shadows, it will kind of be a very confirming tool to take your trades. And when you, for example, let's look at this one. Let's look at this one in particular. Do you see how, you know, someone has already started rejecting this level? Because that means someone has started buying, right? Because if there's a shadow here, it means someone's buying. So when you are seeing key levels, that is this, all these lines are the developing value area high, developing value area low. When you find these key lines and you see that, people are evidently rejecting it here, that's when you can think of going long, you can think of going short. And you have to always confirm this move with OI. That's the only thing. If you are not going to, if you're not going to confirm it with OI, it's going to be a problem. So if you are clearly seeing that, there is support here, you can see that there are people sitting here waiting to buy it, then it's very likely it's going to go up, because that OI itself is a tool. It's telling you that, yeah, there are bullish positions here, there are bearish positions here. And at the same time, if you see a signal, it makes your job of trading much easier, because you can just automatically take a trade and you can put your stop loss at the lowest low of the consolidation. So see, this was a consolidation. A consolidation, for those who don't know, is a place where the market moves sideways. That is, the market is an indecision at that point. So if you observe for a consolidation, if you observe that, you are continuously seeing this pattern where the divergences are plotting higher and higher and higher, that's a good sign. And when you get a signal and you feel, it's okay, it looks like a decent trade, I should take it. At that point, you will set your stop loss to the low of this, you will set your stop loss to the low of the consolidation. And that's how you will make your trade. So every trade you take has to have a stop loss, and that stop loss has to be at the low of the consolidation. In this case, for example, if the candle's low, if this itself is the low of the candle, then you would obviously put your stop loss here, because this is also the low of this whole consolidation that has happened till now. Once you realize that you will put tight stop losses, you will look for divergences and confirmation, you will confirm trades with OI, you will try and align with the market, then you will observe a lot of profitability, because your risk to reward will be really tight. Because let's even take this case for example. This trade, had you taken this, the stop loss would have been here. Okay. Do you observe also how the divergences are shifted up? Do you observe this? I hope you guys see this. This is what's important. Is the divergence increasing or not? So when you see a lot of these buying candles are happening and you're seeing a lot of support forming, you can take this trade once you've confirmed divergence and OI, and you can put your stop loss here. And in this case, your risk to reward would have been about, say, 2055, it is a 5 point stop loss. And okay, optimistically, if you take it also, you can do the math, 40 point move and 5 point stop loss. It's all, trading is all about risk to reward. If you're going to focus on that, that's the only way you're going to be profitable, no matter what strategy you use. I am planning to try and automate this more with, like fixed stop loss and all, but there are a lot of clear signals I see in the market, which I just know, I don't want to take this until I can confirm it. But the idea is that, you cannot put the bigger picture in code so easily. For example, if it's OI, I still don't know how to put OI to code. So maybe I'll try and figure that out. Maybe I'll try and work it out. There are a lot of things involved in, trying to get the bigger picture of trading. But this will help you make the best entries. Its objective is to help you make the best entries. It will give you the access to a very powerful tool of market profile. Even just, like, let's just forget the signals even exist. Now my chart just load. Okay. Okay, these lines in itself, you can clearly see it. These are the lines about which all price action in the market occurs. You'll see it's taking support here. It's because there is a relevant line out here. You see it's taking support here. It's because there's a relevant line out here. So all price action in the market will only take place about key levels like these. For example, you see it was resisting here and it fell. It took some kind of support here, took resistance here, support here, resistance here. So you have to have an open mind when you trade the market, and you have to not just blindly rely on everything. You have to confirm divergences. That's the main thing. If you are seeing, for example, say in this case now, there's no signal. If you were to even not look at any signals, what are you seeing? You are seeing, whose mic is this? Please mute yourselves. Right. Okay. When you find that the market has taken support, you will see that, you will find these candles with a lot of shadows. So this shadow, or this wick as they call it, is what gives you the cue to first thinking of, should I enter this trade or not? So you see the divergence was here. It was significantly lower, about 24. Then the divergence here was about, like, for this value is about 37. So that is a significant divergence change. And you can see, there's buying pressure here, there's buying pressure here. This is a confirming move, and this is what you will base all your trades on. You see this also. You see, buying pressure has started. And finally, you see this candle where you also find this long wick, and you see that, people are willing to send this up. So once the candle closes, um, right. So once the candle closes itself, once that 1 minute has passed, only if that signal still exists should you wish to take it, and you will want to put your stop loss at the low of this consolidation, which in this case would be here. Right. Does anybody have any doubts? Please ask me. Hello. Does
Yeah, I'm
anyone have
okay,
any
man.
doubts? Okay, are you getting it?
Yeah, yeah, I'm okay. I just want to once probably go through the book. So once you're
Sure,
done,
sure,
just
sure.
send the link across.
Sure, I'll do that. I'll do that.
So in the book, it's
Let Sarge complete Arath. Yeah, Sarge, please
Yeah,
ask.
just give me a second, bro.
yeah,
So
yeah.
just want to know from you if a description about divergence indicators also mentioned in the book.
No, it's not. It's not. It's not. It's not given anywhere in there.
It's not. So you've added that indicator to this graph, right? As
Right.
for us to for us to make it easier.
Yeah, it makes the job easy. Yes.
Okay, chalo. That's it. Okay, fine.
For example, look at this short trade also. You observe how the divergence was much higher out
Mm-hmm.
here, but for roughly around the same price, the divergence is much, much lower.
Yep.
64 versus 76, 10 point, 12 points. So always look for these things. Even look at this one. Do you see how for almost the same level, the divergence
Mm,
is characteristically different?
right.
So these are the cues that you will take to trade. Now, assuming,
So
okay,
primarily, if divergence increases, the market outlook would be a bull outlook.
bullish, bullish outlook,
Okay.
correct.
Okay. Perfect. Perfect.
So
Okay.
also you many times you will observe when the market is developing real time, okay, you will see that you will automatically just start gauging the movement of how this chart is plotting itself. And you will know, supposing, say you had, okay, I put my cursor out here on this candle, okay, or say on this candle, all right,
Mhm.
on this candle. Now just imagine you don't know what is happening after this, cover it with the rest of your hand.
Right.
Okay, now you see the rate of change of divergence itself was so high,
Hmm.
you very likely know it's not going to take support here, because you know by the time it's going to reach here, by the time it's going to want to take a support, this thing will significantly be lower than the divergence value that was here. The last divergence value was this, correct?
Right.
But you see how this has moved so fast, you can just understand the momentum of the damn thing, and you'll get a clue ki, okay, no, it's not going to hold. When you're seeing how people are selling it off, you're seeing all that volume come in. Look at this case. When you see all that volume come in, you can clearly see how the volume is so much higher. Why is it going to take support out here? Are you getting it?
Mhm, mhm.
Only when you find the selling volume reducing, buying volume slightly starts increasing, and you're also seeing that, on OI, yes, that's a very big support. It's very likely. So even if you didn't know that today was a bearish day, okay, and you were just trading, say, Bank Nifty, all right, and you thought the market was going to hold this, technically, if you cover your hand out here, okay, you
Right.
just cover the rest of the screen, this is actually a good signal.
Okay.
That's because you are seeing it's continuously forming all these, these shadows from the bottom, and not until here did you find the divergence increasing. Okay, so you see how the divergence was continuously going down, going down, going down, but out here
It's
suddenly the
suddenly
divergence came
increasing.
up.
Yeah. Yeah.
So
Yeah. Got it.
this
Got it.
this was a good
Got it.
trade. Now it's a different thing. The whole perspective of the market was different. The whole perspective of the market
Different.
was bearish. Nifty is
Hmm.
collapsing. Likely it's not going to hold either. But on an otherwise normal day, this would have been a very good trade, which you can see by the number of people who got into it and it came up, but then there were people willing to sell it and bring it down. So in this case
Right.
also, for this trade, because you saw the divergence was higher, you have to look for this divergence value always.
Hmm.
Because you can see the divergence is clearly higher, you can simply have put your stop loss out here, and this trade would not have even hurt you. It would have been a peanut of a loss.
Right.
Look at this trade. Okay, so do you see how the divergence is just kind of going down, 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 down,
Hmm.
right? But the moment we come here, it's again lower, but the divergence is significantly higher.
Increased. Right.
This is a relevant support. So this is a trade you can look at. Even let's look at this case. Okay, divergence is going up, going up, going up, going up, going up. Then it came down. Now no signal came, so no trade was taken. No trade was taken. No, we didn't take any trade. But when that signal came, what did I see? I saw that the divergence value for roughly about the same price. You see, back in time, if I just went back in time in this consolidation, at this price, where was the divergence? It was here, right?
60 something. Yeah.
Yeah, it was really high. But for the same price, just at a different time later on,
Mhm.
you see it's here,
Right.
right? So you will start looking for these things, and this is how you start trading. When every time you
Okay.
anytime you're in the middle of a consolidation, even if you don't have my signals, even if you don't have my signals or anything, if you're seeing a consolidation, if you're seeing that the bottoms of the divergence are just plotting lower and lower, and even the tops are just plotting lower and lower, you see it form like this parallel, this kind of channel that is moving downwards.
Hmm.
So you're not wanting to go long out here because it's just clearly showing you it's going to probably reverse now, and then boom. And even this, you don't want to go long here, you don't want to go long here, don't want to go long here, don't want to go long here. But the moment this comes, you see this value is here. So that's good. You can take that trade because the last
Right.
value was here. It's literally 7, 8 points apart. Now, I am still struggling to figure out how to put this in code so that I can reduce that job of yours. But it's gonna probably take a while. But any person who's just simply seeing the charts, even he can do this.
Right. Right. Right.
Right. So
I
you
got it.
just
I got it. Yep.
the whole objective is you cannot leave your brain at home and trade this. That's the only thing. And even if you do, if you really respect your risk management, put a stop loss here, your losses will be so small. Even if you accumulate charges, when the good trades come, the profit will be really high because you see the loss is nothing here. Like in this case, the loss will be what? Nothing. But here, when you take a good one, here, that's a big move, big move. So your risk to
Hmm.
reward itself in this strategy is so high that you can afford to be wrong most of the times. Even though that's not the goal, you don't want to
Right.
tax yourself with small lots of losses. You have to obviously really see the bigger picture while trading it. But even if you say you took this trade, say it looked good to you for some reason, you found this good. Okay, if this had gone down, where would your stop loss have been on this trade? Here,
Hmm.
how much money you would have lost? Nothing.
Right.
And say it had moved nicely in your favor, you can just do simply SL at cost.
Right. That's what we generally do.
Exactly. Once it has moved, then you can't lose any money only at all. Now,
Right.
coming to that, I remember today I asked you guys to put SL at cost. Now, since that indicator comes, everyone will react to it at different speeds, at different times. The guy who's really watching will enter here. The next guy will enter out here. It might enter here. Whoever you enter. Now, my job was to give you signals and to verify them. I will keep doing that. But if you say you enter like this is just 1 minute, man. I can't blame you for not getting it. Okay. But if
Hmm.
I tell you SL at cost, it's not where you bought it at. It will be here at the close of the candle because I'm
Right.
assuming you're going to enter at the candle's close, not after 5 minutes and the job is done. So SL at cost will basically be for that particular signal. It will be at the close of that candle because that's where I'm assuming you guys have entered. Let's take this tiny little trade. I will not use such small trades, but in case they come. Say you ideally you should enter here. Okay. Now say you enter out here. If I ask you to put a SL at cost, it'll probably hit no.
Yeah.
So now I cannot come to your screen and do the trade for you immediately. I'm sorry, it's not possible. But at least you will understand how to manage your risk on these trades. And you can also start looking at putting your own targets because you will observe how these levels actually have importance. You will see that it gonna take support here, resistance here, whatever. So if you've taken a trade, if you want to at least book one position out of it, you probably want to book it at a level like this. So the moment the market reaches some level like this, you can think of booking one lot at least. कि हाँ profit तो है इस trade में now.
Hmm.
Hmm. So the biggest advantage you will get by having access to the tool is not even the signals. The signals are just a way to stop you from overthinking when you're trading. Okay, but the biggest advantage you do get is access to these plots because this is where all price action happens in the market. All price action happens on these levels. It's not about moving averages and pivots and all that stuff. No, it's this. This is the biggest thing I learned. And as I mentioned, there are books on this.
Mm-hmm.
So this is not just something I've just cooked up and thrown it at you. There are books on this. How you wish to use it is up to you, but I have incorporated key aspects of price action. That is, for example, any candle whose body is so much, the wick is so much, body is so much. So based on that, on key levels, and I have done a lot of filtering. That is the biggest task, because even technically this should have plotted, this would have plotted, but I have filtered out a lot of stuff, and that took me most of the time to make the signal system. But you have the tool, and I'll just walk you through the settings on this. So by default, just keep it at 1 day always. The value area, even mathematically, as per what institutional investors look at, is where 70% of trading activity occurs. Do not change this. This is a smoothing tool. Okay, so what I will do is, first I will show the unsmooth values, and then I'll show you what I did to smooth them out. Okay, it'll just load now. These current settings, the smoothing and all, are not there on your indicator because they're already being displayed at the same time. You will see some zigzag lines and you'll see the smooth version of it. So you're already seeing the same thing as what I am seeing. Okay, but
Mm-hmm.
these are actually the plots which are not smoothened. Okay, but we have done smoothing on these to make the signal quality better. I observed that the signal quality is much better when it is smoothed out. So you will observe I've put a period to it, and just for your sake, I will mess around with this for now, just to show you how the effect, what it effect is on the chart. Okay, so I just made it 30 just for fun, but keep it to 10. Yeah, this just load and you will see the difference. Oh, small, okay. It's loading. Yeah, do you see how this shifts considerably when I increase the smoothing factor? Like this smoothing factor right now is 30. So the signal will also plot like that. You can adjust it how much ever you want. You can tweak around with it. But I have used 10 because I found it best on Nifty. On different asset classes, you can just adjust it yourself. And yeah, you can see the smoothing is more tight now. And the whole signal, all the signals will also change if you change the smoothing. I have in the next iteration, you will have the option to hide the unsmooth values and show the smooth values. So this is the new iteration. Actually, I'll launch it after this free trial is out. And the preferred signals are being worked on yet. They are not. I'm preferred signals are basically ones where I'm looking for the divergence confirmation. So I am working on this, and I will be happy to share it with you the moment it's out. But till nonetheless, you don't really need to depend on me for it. You can do it yourself also. You can watch this. You can understand the same divergences and have tight risk rewards. And this last thing here is the ratio of the wick to body that we are looking for. So we are looking for any candle that is doing some characteristic price action on these key levels which we have plotted, who such that the wick is about 0.75 times, at least 0.75 times the body of the candle. But for different asset classes, if you want some more accuracy, as I would call it, but it would not relevantly be, it does not necessarily be accurate because you will not get that many signals also. So if you do different asset classes, you can change this ratio. You can make it 2, you can make it 1.5, you can do whatever you want. The key parameters are in front of you and you can use this however you would like. But nonetheless, just keep this at default. And if you really want to not depend on signals also, you can just switch it off. Like you can just switch off the signals and you won't even need a signal system for it then. And just load. Yeah. Signals are gone. You can trade it yourself also. You see it's taking support multiple times, you can go long. For example, in this case, took support, much higher divergence, much higher divergence. Could have made a signal. You could have just bought it. You could have bought it yourself also. I mean, it's up to you. Does anyone have any doubts? Please ask me. Hello, hello.
Yeah, all good, all good.
Yeah. Does anyone have any?
Zoro,
Are
I
do you have any
wanted
doubts?
to,
Please ask. Please ask
yeah,
me.
I was observing that this is a lot like RSI. So with
No,
the
the
30
divergence
and
indicator is
70,
RSI only. Divergence indicator itself is actually RSI only.
correct, correct, correct. So
Huh.
when I observed that, my basic question was, how do I include for smoothing? How do I include moving average or exponential moving average? Then you answered that right now, only 5 minutes ago. So that good.
So that this is actually a variable that's
Yeah,
put
yeah,
into my code, and you can just tweak around
correct, correct.
with it however you like. So
Yeah,
for 15, what will happen is on a 15-minute chart now, this value might even this 10K value will actually be too high. So you might want to reduce that even further to like 4 or 5 or something. You're doing a
sure, sure.
15-minute chart. So it's all up to you. I mean, all the basic settings you need to work around with are already here in this terminal. Rest of it's all in code, which is all hidden away.
Correct, correct. No, that's what I always like using it with a smoothing one. So my question was that only, and it's available for you.
And if you want some peace in the market, if you know it's a very bearish day, you can just simply choose bearish signals and you'll only see bearish signals. You won't see bullish signals after that. That is the best part. You see, if you feel that the market is bearish, you will not get bullish signals. So it's a trader's perspective. If you want to see both, you can see both. If you want to just see bullish, you can see bullish. But I keep both because I can even base my exits on it, right? And I'm open to the idea that the market can reverse from any point at any point of time. Does anyone else want to ask me anything? How to apply it? What do you want? I mean, anything you can ask me. I mean, that's the whole point of this session. Because I want you guys to be able to use it yourself also. You don't even need me, honestly. My analysis has already been done. You can use this yourself. That's the point. That is the whole objective of wanting to share access with you guys to this indicator.
Uh,
It's free for
Zoro,
one and
other
a half months
than,
for all group guys. So up to you how you want to use it.
yeah,
Please
bro,
ask me.
other than OI chain,
Uh,
what other indicator can I use this in tangent with? Divergent indicator. What other indicator do I use it in tangent with other than the OI chain itself?
you can look at on balance
What is
volume.
it best? Okay, what is the best complement to it?
The best complement is divergence itself, but if you want to really look at volumes, you can look at on balance volume. You can compare the on balance volumes and you can see. For example, I'll show you. I'll just switch
What
this
about
back.
PMO?
Nah, I didn't. I was trying to use a filter on it. It is not good. So you can see. You can do
Okay,
what you are always allowed to. Matlab, you can always use an indicator parallelly with it. It's up to you based on what security you're analyzing or you know anything. But I'll show you an example of this on balance volume, which really helped me a few days ago. In this case, now. So yeah. So remember when I said if the market extends itself and the volume is like it's lower or something, then the market's probably going to reverse. So you see the volume also roughly is the same, but the price is significantly higher. That means not that many people wanted to buy into it. Alternatively, this one guy, I'll just find it for you. He developed some OBV cross or something like that. Yeah, this. So if you want, you can use this also. I mean, when you find something like this happening, these dots or whatever, but it's all about key price action. So if you find that actually I don't even, yeah, so you can use this, but in my experience, divergence was the best. I have not seen anything better than that for this so far. I am always searching through indicators every day, but this was the best thing I found so far. So you can use it. If you want to put pivot points just as references, you can add that to your chart too. I mean, it's up to you.
Sure.
And obviously, just like bottom line was this only. If you know the market is clearly in a free fall, please don't go long on it. I knew at 10 o'clock the market can't go in a free fall at 10 o'clock itself. It's not going to go down in a straight line. It'll at least try and come up once. That's why I gave that one trade. After that, I said ab aur nahi dunga because it was just too unidirectional. It was just continuously going down. See, at 10 o'clock, the market's not going to finalize any direction and go straight in that direction. Are you getting it? Can you imagine this thing just going up like this all day like that? It doesn't do that, right? It will at least make some move and then it'll break upwards, or it'll come down, come up, and then go downwards. I think this everyone has seen. Oh, okay, wait. What minute chart is this? Yes. So wait. 1 second. Oh, that's why. Okay. This setting was changed. So you can tweak the settings however you like. I just yes. Wait, let me just load this back. Okay. So you can smooth these. You can, if you want, you can smooth these values more or less. And if you feel that better signals are coming by smoothing it more, then you can do that. Otherwise, in my experience, I have seen this default value for 1 minute charts is the best. So I would recommend that you use these and you always understand the bottom line that no level is going to keep on holding all the time. If it's going to keep retesting, it's going to break. If it took support here, it's not going to take support again, man. It's just unlikely it's going to keep taking support, especially when this is so narrow. This is called an initial balance. Okay, whatever trading activity occurs in the first hour is called the initial balance. So if the initial balance is too narrow, it's not going to hold. It's like a coffee table. This guy mentioned in the book also. This also is mentioned in the book. If the initial balance of a day is too wide, think of it like you're baking like a coffee table or something. If the base of that table is wide, it's very unlikely it's going to topple over. But if that base is very narrow, it's most likely going to topple over and go in some direction. So this is the exact example he also mentioned in the book. So after this conversation, if you have any more doubts, please ask me. I will answer those happily, and then I will share the PDF of the book with you also. Harsha, do you want to ask me anything? You've been a part of this meeting for a while.
No, Zara. Thanks. But I'd
Yeah.
have a look at the video again to like brush up everything all over because it's kind of a lot of things to process also.
Yes, just bottom line, just look at divergence. Always look at divergence.
Yeah.
If you see it is going significantly higher for the same level, then it's good for a bullish scenario. If you see it's going significantly lower for the same level, it's good for a bearish scenario. Just watch that and you can filter out 90% of the signals. The remaining 10% you can filter out with OI. Okay, fine. All right. Thank you, everyone. We shall
Thanks a lot.
conclude this here. If you have
Thanks.
anything, please DM me. We can discuss it and then
Thanks,
we'll.
bro.
Okay, buddy. Take care. Bye, guys.
Bye
Thank
bye.
you. Take care.
Bye.
Good day,
Bye.
guys.